broadly speaking in the market, I'm a little skittish, yeah.
Tech stocks in the fucking toilet. Now I'm kind of positioning myself to hedge myself in this situation.
And the reason I think it's different is if you just look at one thing and one thing only, which is that we have a massive labor shortage in America. And there's an incredible stat that I saw, which was the average hourly earnings of non-manager people in hospitality and travel. And the average salary, the mean salary was around 20 some odd dollars an hour, and it's now 33 bucks an hour. And so what that to me says is that we are going through a really sustained period where you cannot get people to do.
Most people are under the impression that these are short-term kind of contractions and expansions, and that this is just a thing that needs to get worked through the system as we readjust to a post-COVID world, blah, blah, blah. I think it's different. And the reason I think it's different is if you just look at one thing and one thing only, which is that we have a massive labor shortage in America. And there's an incredible stat that I saw, which was the average hourly earnings of non-manager people in hospitality and travel. And the average salary, the mean salary was around 20 some odd dollars an hour, and it's now 33 bucks an hour. And so what that to me says is that we are going through a really sustained period where you cannot get people to do the work that needs to get done.
Wow.
There's people, right? So labor capital, I just think it's getting more and more expensive to get folks to do work. And then there's the raw materials that you use to make anything. And everything that I see is that stuff is going bananas. And so I put these two things together and I'm like, I think this stuff is here to stay. I'm really kind of a little bit of a, and I had not worried. And you can see in every episode before this, I was always consistently like, there is no inflation. You can fade the inflation trade. Now I'm kind of positioning myself to hedge myself in this situation. Central bankers around the world have raised rates. The only place that hasn't gone up is Europe, ECB, and the United States, the Federal Reserve. So, and let's be honest, Europe and the United States, we absorb labor and materials from all around the world, right? We are the net importers. We are the net ultimate buyers of last resort of all of these things. And so if you're seeing inflation in those other, supply-driven economies, they are going to come on shore. They're going to hit us in the face. I think prices are going up.
Chamath.
I think the labor shortage is going to get worse, not better. I think we're going to have to pay people more to get out of it. I think prices are going up. Input costs are going up. Energy costs are going up. So this is it. I think that probably the Fed and the ECB are really raising. This time next year, they're probably in a really tighter posture. I don't think it's a short-term blip. And I think that we are in a period that will resemble the late 70s.
I'm very concerned about medium-term inflation. And so in an inflationary environment, in my very simplistic view of the world, I want to own three things. Hypergrowth, because hypergrowth can always outrun inflation. Think of that as like companies that are growing 50+% a year. It's incredible growth, right? Then I want to own cash generative assets. Think of that as like, a great example is like a mining stock. I know that sounds crazy, but it's pretty incredible. And then I want to own non-correlated assets. Bitcoin, Solana, DeSo, a lot of the DeFi protocols, because it's a great counterintuitive hedge against all of this stuff.
Tech stocks in the fucking toilet. No bueno for no cash flow growth stocks. Bleh.
Yeah.
The thing with tech stocks is we tell everybody the same thing. Your money is going to come 30 years from now because we're going to be a monopoly by then. And every dollar that I have today, I'm going to reinvest into R&D and engineering. In an environment where interest rates are zero, you're happy to do it because you're like, well, great. These guys are investing at way better rates than zero, which is what I get from, my bank. And so I want Facebook and Google and Amazon and all these startups to be putting all this money in the ground on my behalf. But when interest rates start going up, they say, no, hold on a second. I need more money up front, less money in the future because the future becomes more uncertain. And that's the big trade-off for tech companies where they get really pummeled.